So we've been talking a lot about this morning. A lot of big banks now are raising the odds of a potential recession.
Yeah, they are. So it has a lot of people, with reason, concerned about what to do and how to prepare. Professor Dietrich Von Biedenfeld with the University of Houston downtown is here with us. Thank you for being here. We've got so many questions coming in. It is unbelievable. So thank you for trying to help us out.
Absolutely.
Let's start with the first question, and this is one that we've gotten a lot specifically. What should people invest in if they still want to, and obviously you can't just specifically say, but what should people be considering if they want to still invest their money right now or eventually want to make their money back?
Right, and of course, as you mentioned, the caveat is I can't give investment advice or market advice beyond just the general speculatives, because you want to consult with your own personal financial advisor on that, and they've got a lot in Houston. But within that, you want to look at some of these safer areas. Long-term treasuries are usually a pretty good bet. Additionally, gold is a pretty safe one. Even when it drops, it's usually rising. So you might say, oh, gold dropped 7%. Yeah, but it rose 9% before that. So in that sense, you've still gained 2%. CDs are a pretty stable one when you look at sort of confirmed rates of return. But again, it really depends on your stage of life, when you plan on retiring, what your financial assets are. I mean, it's a great idea to invest, but not if you have $10,000 in credit card debt, right? That 29% is not going to be offset by a 5, 10, or even 20% market gain. Of course, cryptocurrency was set to be a big winner at the beginning of the year, and it's even dropped value. But when you think about how things like Bitcoin and Dogecoin have risen from $1 to Bitcoin going over $100,000, even if it drops to 77,000, what is the percentage? I mean, you had to get a calculator to think of the percentage gain on when it jumped from $1 or even $500 coin.
And I'm looking, we have quite a few viewers who have been looking to buy a home, and now they're concerned and wondering if they should wait a while. What is your suggestion for that?
Right. If you're already in the process, I think it's better to continue, because at this point, also the Fed is now getting a lot of pressure to lower interest rates. They were not for that, but as they consider lowering the interest rates, that could help those potential people with mortgage rates, and you might see additional people enter the market with favorable interest rates and lower credit scores that increase competition. The challenge is, if you're not ready or if you're concerned about your job, if you buy a home, then you're setting a mortgage. You can't downsize to a smaller apartment. You can't move back in with your parents necessarily. And if there's a recession, you're not going to be able to sublet that or Airbnb it in the same way that you might have in the past.
Another question. This just came in actually. I have a high yield savings account that is earning nothing. Should I move to a high yield account? Will this account produce a difference?
Right. I don't know how you're not earning with the interest rates right now. I don't know how you're not earning in a high yield savings. You should be earning some percentage. So I would check with your bank or the entity that you are sort of holding those accounts to make sure there's not some error. There should be some gains because of the Fed's raise of these basis points over the past year. But if you're not getting that, definitely move to a high yield, because that's going to be an area where if you don't need access to those funds, it allows it to gain further. The challenge too, and that's when you say, do I move this into maybe a little more volatile market while the stock is down, because we know that some of these stocks have to come back up just because of credit. A lot of these with the S&P and the Dow, they have to go back up at some point.
That's the biggest thing that we're hearing from our viewers, is asking, they're trying not to panic. They're talking to their financial advisors. They don't know to go with their gut or to go with what their financial advisors to say. Do they sell off, and that makes things worse? Like, people just don't know what to do right now.
Absolutely. If you need access to that cash, if you're a 72-year-old person who relies on your 401k drawdowns each month to finance your retirement, then you just might want to be more conservative in what you withdraw. But the idea of some of these stocks, now some, again, tech stocks, they're more volatile than others. But others, when you think about Coca-Cola, that's one that if they don't make money on Coke, if there are, as Mexico's instituted certain sugar policies, and you say, oh, the international market will constrict for that stock, they also have water. When you think about craft brands, and you say, well, what about cigarettes? Well, they have cheese. Everybody likes string cheese. So lactose intolerant people accept it. So in that sense, with this diversified market, a lot of these companies will either absorb, they'll merge, which we've seen attempts to, and this may be a more favorable market for certain airlines to see their mergers approved by the FTC, where they might have been previously denied. those stocks have to come up. People will have to fly, even with the pandemic, and we reduced business travel substantially. Airlines found a way to bounce back. They modified their business models. They shrank the seats a little bit, so you and I especially will know with our knees and our chins. And they started making money again.
Yeah. All right. Professor, we always appreciate you and your expertise. We've seen a lot of you here in the past week, and I'm sure that will continue here as
a lot more questions for you for sure. Professor
Absolutely.
Biedenfeld, thank you so much.
Thank you.